David Golden, let's talk tech takeouts. How will slower growth abroad make U.S. tech companies more likely takeover targets?
Well, the key is growth, Greg. All of these companies, whether in Europe or in the United States, are fundamentally valued on their growth prospects. If they can't grow locally, if they can't grow in Europe, they're going to be looking for other markets where they can grow, and that'll be predominantly the United States.
Well, we recently saw Yahoo get taken out by Verizon, joining AOL over there. Those were two giants of the first internet bubble, if you will. Who's going to get taken out from the second wave of internet companies? Is it going to be Yelp or Big Daddy? Who's it going to be?
Well, I think the names that you mentioned are certainly on everyone's short list. Yelp, Grubhub, Groupon, GoDaddy, and the like are all those where they're facing increased pressure to grow and difficult markets in which to do it. I have no knowledge of any particular negotiations, obviously, but I wouldn't be surprised to see one or more of those go by the wayside. I would also, of course, add Twitter to that list. That may, in fact, be the most obvious name now.
So as a venture investor over at Revolution, where are you looking for the next great technology? Is it something Pokemon related or virtual reality related? What are you looking for now? Well,
there are a couple of different areas, not Pokemon and not specific virtual reality, but we're very interested in the sharing economy and the distribution of assets without having to own those. So we like areas that involve people sharing assets without owning them, and we've been kicking the tires on a handful of those opportunities. The other area that we're looking at are big markets where people traditionally spend lots of money, either consumers or businesses, but where the incumbents are a little fat, a little lazy, and a little happy, and generally looking the other way. And a founder shows up, usually armed with some technology, that allows him to do things faster, better, cheaper. Two companies in our portfolio typify that. One is in the custom framing business, which is about as old school as you can get, but doing it online and doing it much more cheaply than you can do in your local neighborhood framing shop or in your Michaels stores. The second is a company here in New York that's involved in the insurance brokerage business for millennials. The way you and I buy insurance is different from the way people in their 20s and 30s buy insurance. They're trying to captivate those markets.
And what about valuations in the current market for venture investors? Sky high, low, just right, where are they?
Still challenging, I would say. We're beginning to see the early indications of what we call a return to sanity. There was so much craziness in 2014 and 2015. Very good companies, but very mispriced in the private capital markets. And it was a little bizarre because traditionally you'd pay a premium for a liquid security because if you bought it on Monday, you could sell it on Tuesday. For the past couple of years, the private markets have been just the opposite. They were paying a premium for a private security that was completely illiquid. Those valuations are starting to come back to earth, and that's good because the companies are fundamentally very inventive and very solid.
And at the top, I mentioned slow growth abroad. You could go shopping in Europe or certainly England right now. Post-Brexit, you have the currency on your side. Do you see anything outside the U.S.?
We look episodically at Europe and the Middle East. And you're right, valuations are coming down more aggressively there, and so the opportunity set is increasing. When we kick it around our partners' table, it's one thing to navigate technology risk, market risk, management risk. Now I have to add political risk and currency risk. It gets a little harder. It's not impossible, but those opportunities for us are very select.
All right, and then finally, we saw Twilio and Line, two unicorns, come public this summer. It seems as though the markets are behaving post-Brexit, so should we expect more unicorns to start getting in line for IPOs?
I think you'll start to see that, Greg. The early returns, Twilio and Line, actually look pretty good. A couple of things have to happen. First, the private shareholders of those companies have to be comfortable with letting the market speak and letting it find the clearing price. We saw that with Square when they went out earlier. They were indifferent to the previous round price. They took the money at the clearing price that they could find. And the second thing that has to happen is a fair amount of patience. If you took the 90 or so unicorns just in the United States and tried to float them 10, 15% of their market caps, it would take about 6 years for the normal IPO markets to digest all of that capital. Obviously, there are a lot of companies that aren't unicorns that are going to be looking at those markets as well.
All right. Well, thanks a lot, David.
Thank you, Greg. Appreciate it.
Thank you for watching The Street.